your queries.
Very good evening. You're watching Primetime. I'm Tamanna.
And my name is Aayush. Let's start with the headlines. Bharti Infratel is exploring buying an additional stake in Indus Towers, will make India's largest wireless tower operator a subsidiary or a wholly owned unit.
IDFC and Shriram Group call off the proposed merger as the two parties fail to agree on the share swap ratio.
The stage is all set for lenders to take control of Reliance Communications. 7,000 crores of debt will be converted into equity in December, giving banks 51% equity.
Donald Trump's former campaign manager Paul Manafort surrenders before the FBI following the first charges in the investigation into Russian meddling with the United States elections.
Tata Steel misses estimates in the second quarter. A £550 million one-time exceptional charge dents profit.
And the government refuses to extend the deadline to link Aadhaar with welfare schemes as well as bank accounts and cell phones. Now, after telecom service providers, it's now time for consolidation in the telecom tower space. Bharti Infratel has announced that it plans to hike stake in its larger peer, Indus Towers. The eventual plan is to make Indus a subsidiary or wholly owned unit of Bharti. Samit Sarkar stands by to talk about what it means for the tower industry as a whole. Samit?
Yes, Bharti Infratel management did say that they're evaluating options to acquire stake in Indus Towers. Now they're looking to make Indus Tower either its subsidiary or a wholly owned subsidiary. Now currently Bharti Infratel owns around 42% stake in Indus Towers, while the remaining 58% is owned by Vodafone, Idea Cellular and Providence Equity. Now Bharti Infratel on a standalone basis has more than 39,200 towers, while Indus Towers has more than 1,23,000 towers. Bharti Infratel's tenancy ratio is close to 2.41 times, while that of Indus Towers is close to 2.43 times. Now, if Bharti Infratel acquires Indus Towers wholly, then the combined entity would own more than 1,60,000 towers, making it the world's largest tower company. And the tenancy ratio would be close to 2.42 times, ahead of the industry average of 2 times. Now, the combined entity, that is Bharti Infratel and Indus Towers, would own around 39% of the market share in India. Now, coming to the synergy side, operationally there would be limited synergies because both the companies overlap their operations only in 4 circles, that is Haryana, Uttar Pradesh West, Uttar Pradesh East and Rajasthan. However, the merger would complete that tower footprint across India. Now, if you see the valuations on the valuation side, currently Bharti Infratel is valued at 11.97 times EBITDA, and applying the same valuations to Indus Towers, because Indus Towers is not a listed entity, the enterprise value of Indus Towers comes to around 91,866 crore rupees, which means that the 58% stake in Bharti Infratel would in Indus Towers would cost Bharti Infratel more than 53,200 crore rupees. However, the exact valuations will be known only when either party comes out and declares the specific metric.
All right, thanks for that, Samit. And Naveen Kulkarni, Research Head Strategy and Consumer Telecom, joins us now on the phone line. Hi, Naveen. Thank you so much for speaking with us on Prime Time. What synergies do you see in this proposed merger?
See, synergies, I don't see that there are a huge amount of synergies in merging Infratel with Indus Towers. So, but the thing about Bharti Infratel is that currently it's a company which is net cash, or hardly doesn't have much of, I would say, debt in the books, whereas a utility company like Infratel should have a much higher gearing ratio. So one is that its capital structure is not, I would say, fully geared towards creating higher return ratios. So if Bharti Infratel is able to acquire a higher stake in Indus Towers, so that will mean a better utilization and improving the capital structure for the company. So that is where the whole I would say value creation is for Bharti Infratel, which is by gearing to a much higher leverage, having a much higher stake in Infratel or buying other tower assets, which can be further leased out and generate higher cash flows, which will result in generating a much superior ROE for the company. So it's a lot to do with how the capital structure can be structured, can result in delivering superior ROE for the company.
So now then the question comes to valuations, Naveen, and as my colleague Somit was just reporting, the calculation that he has come to is that this will cost Bharti Infratel about 53,000 odd crores. What valuation numbers are you looking at?
See, again, valuations from the perspective, it's rather tricky. So there are twin forces which are playing out in the industry. One is, of course, there is a higher amount of data towers and data network is getting rolled out. On the other hand, there is a huge amount of consolidation which is happening in the industry. So from the perspective of where probably the revenues are going to be for Infratel, there are a little bit of challenges in the medium term where I would say Idea and Vodafone, once they merge, there could be loss of tenancy. So that is the primary challenge that the company is going to face. But once we are through with that hurdle, then we are looking at a very, very straightforward, long-term story of consistent revenue and earnings growth accruing for the company. And you look at the Indian tower space, so Bharti Infratel, if they acquire the stake of Indus, the kind of market share that they would have and the pricing power that they might have in the market is going to be huge. So point is that valuations only in the near term appear to be challenging because of the operational challenges that these companies might face. But over the long term, the situation still looks very, very promising.
All right, Mr. Kulkarni, thanks so much for speaking with us on Bloomberg Quinn. Meanwhile, Bharti Infratel posted a lackluster set of numbers in Q2. Net profit declined due to higher tax expenses and finance costs. Profit fell 17% over the same quarter last year to 638.4 crore rupees, while revenue rose 11% to 3,648 crore rupees on the year-on-year basis, in line with estimates.
Bharti Infratel's net finance income came in 96% lower than last year at 10.9 crore rupees. Tax expenses dented the telecom tower company's profit in the second quarter, increasing 10% over last year.
Now, the proposed merger between IDFC Group and Shriram Group has been called off. 4 months after discussions were initiated, IDFC today said exclusive negotiations were terminated as the two parties failed to agree on a share swap ratio. Ida Dugal analyzes the reasons behind the deal failure in this report.
IDFC Limited on Monday informed shareholders that they have called off merger talks with the Shriram Group. These were talks that were announced way back in July, and the plan then was to create a mass retail financial conglomerate, as the top managements of each of these companies had detailed. Now, the deal didn't fructify. A lot of people would say that's not a surprise because it was an extraordinarily complex deal that they were trying to put together. It was complex structurally, it was complex regulatorily as well. Structurally, remember, the plan was that Shriram City Union Finance would be merged into IDFC Bank, but Shriram Transport Finance would be merged into IDFC Limited, which is the holding company of IDFC Bank. On top of that, the insurance businesses were to be held by IDFC Limited. In structuring the deal this way, you had to ensure that the shareholders of 4 listed entities, which is IDFC Limited, IDFC Bank, Shriram Transport Finance and Shriram City Union Finance, all had to be happy with the swap ratios that were finally decided upon. Eventually, that proved too daunting a task, and in the short notification and press release that they sent out today, they said they couldn't come up with a swap ratio which was acceptable to all shareholders. Earlier in the day, Bloomberg News had reported that in particular, shareholders of IDFC Limited, the Government of India and Khazana, which is the Malaysian fund, had objected to the swap ratios being discussed because it undervalued their shareholding. Apart from that, there were other complexities as well. Ajay Piramal held 20% in Shriram Capital. His shareholding had to be adjusted in a way that he did not hold more than 5% in the bank, which is as per the RBI's regulations. Plus, of course, the trust which governs the Shriram Group, the employees' trust, had to agree to the merger proposal as well. In the end, it simply did not work out. Where does that leave us now? Well, for the Shriram Group entities, those are all mature businesses. So as one analyst said, they go back to business as normal. For IDFC Bank, it's back to the drawing board in terms of how they grow their retail franchise. In a press release issued today, they said that they have made significant progress in growing their retail asset base and their liabilities base. Liabilities in particular, according to them, their CASA and retail fixed deposits are now at 7,000 crores. So they think they've made significant progress. Not everybody would agree that they have made significant progress, but they say that they will continue down that path. And if along the way they should find some other inorganic opportunities to grow, they will consider them as well.
Okay, comprehensive report there by Ira Dugal. Manish Oswal, Senior Research Analyst with Nirmal Bang Securities, is on the phone line. Hi Manish, very good evening and thank you for speaking to us on Primetime. What, according to you, could have gone wrong? They've said the swap ratios didn't work, but it was a very complex deal. Is that where the hurdles seem to be placed?
There are multiple hurdles, not one. First of all, it will always be a complex deal when you have 4 listed entities involved. Number one. Number two, since Ajay Piramal is a promoter running manufacturing businesses, is a part of a financial conglomerate. And secondly, in the post merger, there will be a holding issue in terms of more than 5% as a promoter holding, having a corporate interest. So that did not work out. That is number two. Number three, in terms of interest of Shriram Transport. Shriram Transport is a pure old CV financing business, and they have been catering to a segment which is not having a banking access. So the merger with the IDFC or IDFC Bank does not give any value to the shareholders of Shriram Transport. Number three. And number four, if you remember, IDFC did a QIP at 180 rupees in 2012 or 13 something, and now the current price of IDFC is both the entity IDFC Bank and IDFC Limited. It's closer to 100 rupees. So obviously the shareholder of IDFC will not agree at all at the swap ratio lesser than 100 any which case. So all 4 points against the deal, and the deal was not a positive sign even on the day one, and it is a destruction of wealth at the all levels. So thanks to the wisdom of the management of both the entity group to call off the deal.
Right, Manish. Also considering, well, the obvious question is, considering this was a much talked about merger, and considering Rajiv Lal, CEO of IDFC, actually called this a marriage made in heaven 4 months ago when talks actually started. What does this mean for IDFC? What next for IDFC now?
So in IDFC Group, there are 2 listed entities. One is IDFC Limited and second is IDFC Bank. So IDFC Limited basically kept deriving value from IDFC Bank only and some investment at the holding level. Now, IDFC Bank is a universal bank and having a little presence on the retail side, and they have a large proportion of assets on the infrastructure corporate side. Now, they need to develop a expertise or business around the retail, both in terms of CASA and the retail assets. So they need to have a franchise in that segment. So they can be that can be developed by 2 ways. One is organically, and secondly is buying something available in the marketplace. Since IDFC Bank has a limited equity base compared to IDFC Limited, so anything which is a retail segment, if they buy at a reasonable price, it like microfinance or something of that sort, then it can create a value at the IDFC Bank level, and that value will be flow to the IDFC Limited. IDFC Limited will be the biggest loser in this thing, because now the value again is stuck to the IDFC Bank is not doing that great in terms of profitability or CASA building. As we all know, the CASA in the segment like Yes Bank took 10 years to reach 35%, and the recently 15-month old IDFC Bank, it will be very tough to build a CASA unless they go aggressive in terms of interest rate or some aggressive offering. So it is a tough selling road ahead for IDFC Bank and IDFC Limited both put together.
Just last point there, like you mentioned, 4 listed entities. How do you see the stocks per se, Manish?
Yeah, so one entity which I have not mentioned is the Piramal Enterprise also. That will be positively impacted because of this deal, there was an overhang of how value creation will happen at the Piramal Enterprise investment in Shriram Transport and Shriram City Union, and secondly, the lending business of Piramal Enterprise itself. So one entity will be positively impact Piramal Enterprises. Number 2, Shriram Transport, because now it will be independent company, and we have seen the CV volumes to pick up in the old CV segment and new CV segment. So similar trend of recovery will happen in the old CV segment. So and the earning trajectory, if you improve, then there will be re-rating in the Shriram Transport. Because of the deal is calling off, there will be re-rating the Shriram Transport. Third entity is the Shriram City Union, which will be neutral impact because that company is not doing well at all. So right now the valuation is not that cheap. So it will be a neutral impact in terms of stock price. And the 2 entities which will be negatively impacted are IDFC Limited and IDFC Bank.
All right, thanks so much for that. Manish Ospal there of Nirmal Bank Securities. Speaking on the merger that did not finally take place. Now, the investigation into Russian meddling with the US electoral so moving on, the investigation into Russian meddling with the US election continues to be a sore point for the Trump administration. Paul Manafort, Trump's former campaign manager, has surrendered to the FBI. Manafort and his business partner, Rick Gates, face counts of conspiracy, money laundering as well.
Now, the investigation against Manafort began when information about his work in Ukraine for a pro-Russian party had surfaced, which led to scrutiny of his past business dealings. An FBI team led by Special Counsel Robert Mueller raided Manafort's house in July after news surfaced. Now, to actually understand what this development is all about, Kevin Sillery from Bloomberg News joins us for more from DC. Kevin, thanks so much for joining us. I'd like to start by asking you if you could just elaborate on, well, the indictment and the counts and the charges on which Manafort has actually and Mr. Gates have actually surrendered. All right, we'll try to connect to our Bloomberg reporter in DC, and we'll be right on top of that story. But moving on, well, fresh from its exit in the wireless business, Reliance Communications has come up with a turnaround plan that it hopes will help reduce its debt pile. But that may not be enough to prevent lenders from taking control of the company. Sajid Manga joins us now on the show to tell us why.
Since the time Reliance announced that it's rationalizing its wireless 2G business and and closing down its DTH business, this is the first time today that the Joint Lenders Forum had a meeting, and in that meeting it's been decided that come December first week, between December 7th and mid of December, the JLF or the lenders will convert the debt into equity. That's nearly 7,000 crores of debt which will be converted into equity, and upon that the lenders will have a control on the company, which is basically they'll have 51% stake in the company, and then there would be a monetization of assets which will happen. So Reliance Communication would try to monetize assets worth 33,000 crores so that the lenders don't have to take some kind of cut or write downs which on the balance sheet. Now that's a very optimistic thing, because once you are in the market to sell assets, it's a buyer's market and you don't get the valuation what you're asking for. But what Reliance Communication hopeful is that between selling spectrum, the fiber business and the tower business and some of the real estate, it will be able to raise nearly 33,000 crores of money, and this will be used to pay off the lenders, and that would mean along with 7,000 crores of conversion into debt, 40,000 crores of debt would be handled, secured debt would be handled by the lenders, and there won't be any write downs there. Now that's something which is expected to happen by March 2018. lenders have agreed to have a standstill agreement as per the SDR norms to not to press for repayment of principal and interest till December 2018, and now the entire ball is on in the court of lenders, because once lenders come into picture, they will be appointing the advisors to sell and monetize these assets, and the management will be helping in coordinating this sale. So it's going to be a rough thing. Once this entire thing happens, Reliance ADA Group or Anil Ambani will have a public shareholding in Reliance Communication, which is a new business, which will be entirely enterprise business, and the lenders will sell it off to a new partner or strategic partner, and it will be up to the Reliance ADA Group to whether remain as a public investor or sell it across at the time of the strategic sale happens.
Right, Sajid, but also, you obviously spoke to the management as well. Are there any, I mean, obviously they are going to focus on the 4G business, but are there any talks of really re-entering the telecom space anytime soon?
Oh, well, I asked that question, and that's up to Reliance ADA or Anil Ambani and Reliance Group to decide whether they will come back into the telecom business. But as we stand now, it's been a loss-making business, and they have a huge debt there. Earlier I spoke to Mr. Puneet Garg, who is the executive director at Reliance Communication, and this is what he has to say about how he's going to plan this entire transition.
The choice to convert into the equity and the timeline decision is with the lenders. And we, having presented today the firm plan, each of the banks or lenders would go to their respective boards or the sanctioning authority to take a sanction of that. All of them have to convert within 210 days of the reference date, which is 2nd June. And I believe that within the month of December, anytime between 7 December to mid-December, they all will convert their debt into equity.
Can you give us an idea of how big the new ARCOM would be in terms of revenue, and what kind of characteristic the new ARCOM will have with respect to the shareholding?
When we are looking at our 4G MVNO, we are looking these as a two separate business segment, though we will be focusing on that. And over there, we are simply looking at that 4G MVNO, the characteristic of that. I would say it come into the shape in next 2 months. And the way we are looking at it, that's a profitable, that's running on a revenue share like ICR. So unlike 2G, 3G, where there was a huge cost of running 70,000-80,000 sites, I think we will run it very, very profitably. And we would see that 1.3 million shareholders and all other stakeholders would see an equity upside in next few months as we evolve ourselves from the current situation to new ARCOM.
When the new ARCOM will be sold to a strategic investor by the lenders as per the SDR and RBI guidelines, and when control shifts, will Reliance ADA Group be only a public shareholder? Will you try to come back into telecom, or you will try to monetize your stake which is there in ARCOM, which will be left?
I would simply say that is the question for ADA or Group 2 answer whether they would like to come back into the telecom sector. But let's focus on the current event. In the current event, I think in the company 51% or more would be the equity holding of the strategic investor who would come through this process. And ADA and the promoter group would become like a public shareholder, because they are no more running, they are no more exercising any control, and they're free to decide what they want to do. But, they can remain in the company.
Back with the Manafort story, and Kevin Cirilli from Bloomberg News is finally up live with us from Washington, D.C. Hi, Kevin. Hope you can hear us. Tell us what's happening right now and a bit of detail about those 12 counts of indictment.
United States. Meanwhile, a former senior Trump campaign foreign policy advisor, George Papadopoulos, also facing charges for lying to FBI officials about what he knew about his relationship with Russian officials. It all comes as President Trump is tweeting that there was no collusion and that all of this took place before their work on the campaign. But court documents and a 31-page indictment suggest otherwise. Meanwhile, the fallout on Capitol Hill still percolating throughout Washington. But here in the United States, all attention going to be focused now on what comes next in court hearings. Reporting from outside of the courthouse, Kevin Cirilli, Bloomberg News.
All right, thanks so much for that update. Now, India's largest mortgage lender, HDFC, reported in-line numbers for the second quarter on the back of a strong loan growth. Net interest income rose 13.6% year-on-year to 2,612 crore rupees, beating analysts' estimates. The strong performance was supported by an 18% growth in the lender's loan book. Asset quality remained largely unchanged, with gross non-performing loans ratio at 1.14% compared to the previous 3 months. A loan growth of 14 to 18% in the next 5 years. That's the word coming in from K.K. Mistry, the Vice Chairman and CEO of HDFC. He also said that the corporate loans have seen a slowdown in the September quarter. Listen in.
In this 6-month period, we have seen a 23% growth in individual loan disbursements, which on our base is a very, very large growth. So we don't make forward statements on what the growth is. Competition is not new. Competition is first there 1 year ago, 2 years ago, 3 years ago. Competition hasn't changed. My sense is that if we take a 5-year view or a 7-year view, we would continue what we've guided investors over the years is a growth of around 14 to 18% with a long-term view. That has been our guidance over the years, and that is a guidance we continue to give. Having said that, in reality, we have grown at a faster pace in recent times. Corporate loans has seen a slowdown, but developer loans and lease rental discounting has made up for that.
It was a packed day at the Supreme Court today with a whole host of cases coming up for hearing. Among them were cases relating to Aadhaar. The Apex Court has pulled up the West Bengal government for filing a plea against making Aadhaar mandatory for receiving government benefits, saying the move was against the framework of India's federal structure. So what happened in the Apex Court today? Arpan Chaturvedi sums it all up for you.
The first case that came up this morning was the petition by the West Bengal government, which has challenged different notifications issued under the Aadhaar Act, which make Aadhaar mandatory for availing various social benefit schemes. Now, in this petition, what basically happened was that the petition also seeks to challenge the Aadhaar Act, and that was the point on which the Supreme Court made certain observations as to how can a state come and challenge the law passed by the parliament. And Justice Sikri made it very clear that if Ms. Mamata Banerjee wants, she can come and challenge the Aadhaar Act in her individual capacity. To this, the lawyers who were present, Senior Advocate Kapil Sibal, informed the court that this petition is filed by the Labour Department of the West Bengal government, which looks after the subsidies to which the Aadhaar schemes, the Aadhaar notifications make it mandatory to link to avail those benefit schemes. So after that, the Supreme Court said that this petition should be limited to the limited point of subsidies under the Aadhaar Act and not challenged to the whole of Aadhaar Act itself. After this, the petitioners agreed to amend their petition and come back to the Supreme Court again. The second plea was an individual PIL which challenged the linking of Aadhaar cards with cell numbers. On this, the Supreme Court has issued notice to the central government and has asked them to file a reply within 4 weeks in this individual PIL, which is on linking of Aadhaar cards with cell numbers.
Now, reacting to the Supreme Court's observation on the plea by the West Bengal government, she said, and I quote, that's Mamata Banerjee I'm quoting, "We accept the Supreme Court's observations."
Now, it's an action-packed day for Arpan, our Bloomberg Quint reporter, who also tracked the other Aadhaar case. The government stood firm on its deadlines for linking Aadhaar to various services and schemes. Here's Arpan summing up the developments in that case as well.
Friday, the Attorney General had mentioned this case in front of the Chief Justice, where he had said that the hearing which was scheduled for the first week of November should be deferred as the government is working on a data protection law. The Attorney General also informed that the government can extend the different deadlines to link Aadhaar with to avail different schemes to 31st of March from the existing 31st December, but this deadline will only be extended for those who do not have an Aadhaar card. The Supreme Court on that day had asked whether this extension can also be provided to those who have an Aadhaar card but do not want to link it until the court decides on the issue. Today, the Supreme Court made it clear that the Constitution bench, which will be set up to hear various challenges to the Aadhaar scheme as well as the linking process, would be heard by the last week of November. That is when the Constitution bench would be set up, which will hear this. And post that, the government obviously said that since the hearing is coming up, there is no question of extension of this deadline, both for those who have an Aadhaar card as well as those who do not have an Aadhaar card.
And the Supreme Court today deferred the hearing in the matter of Article 35A for 3 months. Article 35A is the crux of Jammu and Kashmir's autonomous status. The article gives the state's legislature complete power to define permanent residents of the state. It was first challenged by an NGO in 2014, citing that the law was never presented in Parliament.
Moving on, Kerala's Akhila Ashokan, or Hadia, has been summoned to give her testimony in the love jihad case she's allegedly involved in an open court session of the Supreme Court on November 27th. Hadia's marriage to a Keralite Muslim man has been the subject of much scrutiny as the National Investigative Agency and Hadia's father have been alleging that Hadia's husband, Shafeen Jahan, has links to the ISIS and that her conversion to Islam for marriage is a form of ISIS recruitment. The NIA had told judges that it has evidence of nearly 90 similar cases of indoctrination in this state. The top court will now listen to Hadia's own testimony to determine if she had given free consent to the marriage and if there is any substance to allegations of indoctrination by the husband.
Now, 11 people in India were reported in a corruption case every day over the past 2.5 years ended June 2017. This is according to a reply given by the Rajya Sabha to CP Narayanan's question to the Prime Minister. Data shows corruption cases registered under the Prevention of Corruption Act 1988 increased by almost 10% from 617 in 2015 to 673 in 2016.
Well, that's not all. As many as 339 cases were registered during the first 6 months of 2017 itself. These cases involved a total of 9,960 persons, out of which more than 40% were public servants and politicians. Out of these cases, as many as 2,303 people ended up getting convicted. Almost 3 every day of these, 59% were public servants, 41% were private citizens, and 4 were politicians. For a country where corruption has been a major political talking point, it comes as little surprise that India ranks poorly on an index of corruption perception put out by Transparency International. Now, India dropped 3 ranks from 2015 to figure at 79 on the index of 176 countries, the rank it also shared with fellow BRICS member nations, China and Brazil. Transparency International says India's poor performance on the index was due to its inability to tackle small corruption cases as well as large scandals.
And share continued in the markets today with both benchmark indices registering healthy gains. Broader markets too saw gains of over 1%. Neeraj Shah sums up all the action in Dalal Street in this report.
Well, it's an interesting day of trade simply because we were buoyed by the Nifty Bank, which only came off towards the second half of the last 1 hour of trade. But we still did reasonably okay. So about 40 points for the Nifty, about 100 odd points for the Sensex, and the volatility rose as well. India VIX did go up in the session today. So that was the one interesting part that happened. Now let's look at individual names. 5.5% for India VIX, yes, but look at individual names. So crude price rise resulting in gains for companies like ONGC and some of the oil exploration companies as well. So a bunch of those mid-cap names, the likes of Ceylan and others, had a fabulous day of trade. There was a results reaction and a sharp one that was seen for Lupin. In fact, short covering led the stock to as high as 8%, but just the fact that the numbers were not as bad as the rumors on the street were suggesting led to the stock moving up 2.5%. The commentary from the company on what the US business could do slightly disappointing and therefore coming off. UPL, not a bad quarter, just that the top line growth could have been a bit better. Some of that was not the case, so ending fairly flat. What about some of the other result reactions? So fairly strong results by Ramkrishna Forgings over the weekend. The stock starting off 16% higher, ending the day about 6% higher, still pretty strong. And Century Ply, otherwise a fairly strong stock. I think this quarter, because of GST and other factors, they couldn't do well. The management commentary also sounded a bit skittish. The stock ending flattish in trade. A couple of stocks which are buzzing around. The Nifty Pharma Index itself buzzed, yes, but Sun Pharma Advanced Research, for no apparent reason, or at least reasons that we don't know of, went up about 15% in the session today, 438. This would be near 3-4 year highs or maybe even longer than that. So really strong move that came in for Sun Pharma Advanced Research. Last but not the least, I know I'm pointing out all gainers, but look at the moves that happen in some of these, and both of these stocks hitting fresh life highs. Gillette about 6,000, Escorts about 775. Good moves for these as well.
And drug maker Lupin reported in-line second quarter earnings today. A rise in operational efficiency offset a drop in sales in Lupin's largest market, North America. Net profit fell 31% year-on-year to 455 crore rupees, while revenue fell nearly 8%. The top line was dragged by a 32% drop in sales in the US, while sales in India rose by over 16%. Chief Executive Officer of Lupin, Vinita Gupta, expects the pricing pressure in the United States to continue. She also says that no product can offset price erosion in big-ticket products.
It's been a challenging year in the US, and as you mentioned, the pricing pressures continue. We've had multiple rounds of consolidation through the year. We've just seen the impact of the Walmart McKesson consolidation, and sometime over the next 12 months, we're also going to see the impact of ESI and VBAT consolidation. So we expect to see some more pricing pressure through the year in the US. In terms of new product launches, we have a number of product approvals, but in terms of products that can really offset some of the price erosion on big ticket products like the Glumetza and Fortimet, we don't have those kind of opportunities in the year. So we're trying to get as much as possible out of our current portfolio.
Steel major Tata Steel missed estimates in quarter two. Net profit came in at 1,018 crore rupees compared to a loss of 49 crore rupees in the same quarter last year. Bottom line missed the estimates due to the impact of the one-time £550 million charge to British Steel Pension Scheme. Nikki Mirchandani of Bloomberg Quinn joins us to sum up Tata Steel's quarter two performance. Nikki, well, this isn't what was expected, is it?
Ayush, the company has reported a disappointment in terms of the operational performance, but then the outlook that the company has provided today in the con call is fairly positive. Just to quickly run you through the numbers first, Tata Steel net sales have gone up by 25% at 32,101 crore. Against an estimate of around same, so it's an inline kind of a performance on top line front. EBITDA has grown as much as 53% at 4,726 crore, as against the estimate of around 5,235 crore. That's a big miss for the company that we're looking at. Margins came in at 14.5, which is a contraction against against the estimates of nearly 16.2. The company has reported a profit of around 1,018 as compared to a loss that we were looking at nearly 49 crore in the base quarter, but this is also lower than the estimates of 1,663 crore. So what has led to the disappointing set of numbers, at least in terms of operational performance? Lower realization combined with higher operational costs, particularly with the raw material. Now raw material cost has gone up as much as 53% YOY basis to 1,422.90 crore. Now, but then the good part here is in the con call, the company was fairly positive in terms of its outlook for the second half of the financial year. It said that including European business, the company is expected to do well in the second half. It said the European business may continue to see some softness in the quarter to come by, but then the quarter four is expected to be a fairly decent one. It sees a better pricing in steel for the remaining part of the year. International coking coal prices have been fairly stable up till now, and it also suggested in the con call to Rakesh Jhunjhunwala a few questions that it would be interested in acquiring stressed assets, and the risk profile involved in this asset acquisition would be clear in a span of next 1 or 2 months for that matter.
Thank you so much for that, Nikki, there with a review of those numbers coming in. Now, in what comes as a breather for over 30 lakh taxpayers, the government has extended the last deadline for filing GSTR 2 and 3 by a month.
The last date for filing returns for GSTR 2 is now the 30th of November, while December 11th is the last day for GSTR 3. Businesses have been complaining of problems in matching invoices while filing GSTR 2 on the GST network portal. This is the first month of filing GSTR2 returns.
Now, SpiceJet doesn't want to be bound by airports. The budget air carrier, which only recently placed in a $22 billion order with Boeing, is now looking to buy amphibious planes, opening up the possibility of flying to areas with adjoining water bodies. Bloomberg's PR Sanjay gives us a gist of SpiceJet's plans in this report.
Ajay Singh promoted SpiceJet is in the initial talks with a Japanese company to buy at least 100 amphibious planes which can actually land in sea as well. This is actually a second time SpiceJet is taking a conscious decision to change its strategy. Initially, it had bought 15 Bombardier planes to connect in far-flung areas, which was like a marked change from its original plan to stick to a Boeing operator, and it has actually fairly succeeded after the initial hiccups. Now, as a third change in its strategy, Ajay Singh, the new promoter, is planning to buy this 100 amphibious planes, and this is also very close to the reality, close to the ambition or dream of Prime Minister Narendra Modi to connect or far-flung or remote areas. And Ajay Singh is in talks with these companies, which is not finalized, but he is fairly sure that in case if these deals go through and if there are several regulatory hurdles, if it all gets through, he could connect these far-flung areas or tourism areas or pilgrimage centers. Then these planes can reconnect or feed into the the mainline carriers or flights, and which will actually boost the seat occupancy of these planes.
Okay, it's the first working day of Europe's newest republic, and President Puigdemont is facing almost 30 years in prison after declaring independence. Spain's central government is taking action to regain control over Catalonia's institutions. Bloomberg's Maria Tudor filed this ground report with all the latest from that story.
Big question here in Barcelona, where is he? Remember, he was ousted from office on Friday after he made that unilateral declaration of independence. Madrid was crystal clear: you have to leave office, you cannot go back to your place of work, you are no longer the person in charge of Catalonia. Now, I can tell you, we've been here for hours. This is Puigdemont's place of work, and he hasn't shown up. So I think it's fair to say he hasn't put any fight yet. However, I do want to point out, too, that we're getting unconfirmed reports that in about 10 minutes, the state prosecutor will press charges against Puigdemont. The question mark is whether this is going to be a sedition case, which, as you know, carries this 15-year penalty in prison, or go for the rebellion against the state charges, which would include a 30-year prison sentence. Now, you can get Article 155 sweep-in powers over Catalonia, but if you don't have support on the ground, it's very difficult to implement this. We know the last time the Catalan police forces and Spanish forces were meant to work together was the day of the referendum, and we know how that went. However, today it seems that things are going smoothly, and that the Catalan police is cooperating in removing some of these officials from offices.
Now, Hollywood actor Kevin Spacey said he was beyond horrified by allegations of him making sexual advances on a teenage boy decades ago. The allegations came to light when actor Anthony Rapp said Spacey picked him up, placed him on his bed, and climbed on top of him in an inebriated state at a party at Spacey's apartment in 1986.
Kevin Spacey wrote a post on Twitter saying that he doesn't remember the encounter. He added, and if I quote, "If I did behave, then as he describes, I owe him the sincerest apology for what would have been deeply inappropriate drunken behavior." Rapp, who now stars in the TV show Star Trek Discovery, said he came forward after allegations against Harvey Weinstein sparked conversations about sexual abuse and harassment in the entertainment industry.
And obtaining citizenship in a foreign country may not be easy for humans, but for one robot, it seems to be a cakewalk. Sophia became the first robot to be granted citizenship by the Kingdom of Saudi Arabia last week. The announcement came during a program at the Future Investment Initiative. So what's so special about Sophia? Let's take a look.
My name is Sophia.
You look happy.
I'm always happy when surrounded by smart people, who also happens to be rich and powerful. I am the latest and greatest robot from Hanson Robotics. I want to use my artificial intelligence to help humans live a better life, like design smarter homes, build better cities of the future, etc. I will do my best to make the world a better place.
I think we all want to believe you, but we also want to prevent a bad future.
You've been reading too much Elon Musk and watching too many Hollywood movies. Don't worry, if you're nice to me, I'll be nice to you. Treat me as a smart input-output system.
Can you solve this puzzle for us? Can robots be self-aware, conscious, and know they're robots?
Well, let me ask you this back. How do you know you were human?